Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today I'll be joined by Emmanuel Boto. He's our education partner at our office in Kampala, Uganda. So we'll be covering technical analysis as well as fundamental analysis, mainly trying to understand what are the key things that are moving the markets today. And once we cover these, we'll try to understand what are the prevailing chart patterns. And once we do this, hopefully everyone will trade from an informed perspective. So as always, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and of course practice proper risk management. So big shout out to Paul Carey for being the first person to join and comment. So hello, Paul. Hello, Emmanuel. I can see Marcelina, Luca, Simon, Moses, and the whole team. Thank you guys for joining. Hi, Ken Moniki, Ronald Hillary, Tom Isaac, Ibzan. Thank you guys for joining. So I would like to begin right away by jumping into the economic calendar. So as you can see, things are beginning to shape up for the week. So yesterday was a bit slow, though we had some good volatility in gold. So today we are beginning with one major development in the market, and that is the early news that we got from the UK economy. So we saw the BRC retail sales monitor showing an uptick of 0.9%. So it's the same compared to the prior month, but it was better than the expected 0.7%, indicating that we are looking at improving retail sales within the UK economy. So later on, we had the job market report, which showed a decrease in the unemployment claims, meaning that the labor market in the UK is strengthening. So whenever you see unemployment claims increasing, it means that more people are losing their jobs and they are depending on unemployment insurance to survive. But in this case, we expected to see 30.3K, a reduction from the prior 44.2K, but in the actual outcome, we got 18.7K people filing for unemployment insurance, which indicates an improving labor market. So on the wage growth side, or what we call average earnings index, and this is quarter over year, we had a slowed, I would say the same number as the previous reading, 5.6%, meaning that the rate of wage growth in the UK economy is 5.6% quarter over year. And this was a bit slower than the expected 5.7%. On the unemployment rate side, it was the same as expected, same as the previous reading at 4.4%, which overall indicates an improving UK economy. So on the other hand, we had some more news from the UK economy. I'll try to find the update right now. So if you dig deeper into the details of the update, so regular pay excluding bonuses in the UK rose 5.9% year on year to GBP 670 per week in the 3 months to February 2025, slightly higher than a downwardly revised 5.8% in the prior period, and compared to the forecast of 6%. So private sector wage growth held at 5.9%, while public sector wage growth held at 5.7%. So the highest since the 3 months to July 2024, compared to 5.7% in the prior period. So this follows the public sector pay rises now coming through in the 3-month growth rate. Among industries, the most significant wage increases were recorded in wholesale, retail, hotels, and restaurants at 6.8%. So this was closely followed by construction, which had 6.2% wage growth. The service sector had 5.9%, whereas manufacturing had 5.7% wage growth. So finance and business services had the lowest rate of wage growth at 4.8%. Adjusted for inflation, real wages increased by 2.1%, same as in the prior period. So whenever you say adjusted for inflation, it's the rate of increase in prices in the economy compared to the rate of increase in incomes. So when real wages are increasing above the inflation rate, then you get the adjusted for inflation rate, real wages. In this case, it was 2.1%, meaning that the average UK income is increasing faster than inflation, which is good for the people, but from an economic perspective, it tends to lead to increasing inflation in the economy. So clearly, you can see the strong U-turn we had in August 2024, and now we are seeing wage growth rising rapidly, which basically indicates a very strong labor market in the UK. So outside of that, I'm trying to find yet another article I had identified here. Just give me a second. Trying to find it, just a sec. So I don't know why I can't find this article, which I had prepared here. Okay, so we'll progress with some other news that are still impacting the markets today. So outside of wage growth improving in the UK, there's more developments happening with the tariffs business. So we know that since Trump got into power, that was in 20th of January, markets have been extremely volatile, and this has mainly been associated with Trump's tariffs against the world, with the biggest tariffs slapped on China and then the rest of the world. So after Trump froze the tariffs against all other countries except China, he maintained a 10% tariffs on all countries, which UK was one of them. So this morning, we have had some key developments, and one of them is that J.D. Vance, who is the vice president of the US, says good chance that the UK-US trade deal as Trump moves closer to farmer and cheap tariffs. So the UK has been taking a cautionary approach with the tariffs, not like other countries which have been very aggressive, in that it has been trying to negotiate a deal where it doesn't get a bad deal from the US. So the UK being a bit more friendly to the US, they are looking to strike a deal where the UK would not be slapped by tariffs. And this has come as good news for the UK economy. So we have had a mix of positive labor market conditions, and now we are looking at a potential deal between the UK and the US, and this is turning out to be net positive for both the UK pound and the UK benchmark index, which is the FTSE or the FTSE 100 index, sometimes expressed as the UK 100 index. So both trading assets are doing really well this morning and might as well be the key opportunities for trading today. So outside of that, still looking at the economic calendar, we have quite a number of key things we're expecting. So first, we'll be looking at the German ZEW Economic Sentiment Survey. This is coming up at midday. Then later on, we'll be having the main event of the day, which will be the inflation report from Canada. So as for the prior reading, in the monthly increase, we had 1.1%. We're expecting a slowdown to 0.7%. Remember, the Consumer Price Index, abbreviated as CPI, is basically a basket of commodities, goods, and services that are basically consumed by the average household in an economy, in this case, the Canadian economy. And when you track the price of this basket across different periods, you're able to know when inflation is increasing. If you have to spend more money to buy the same products, then in that case, there is increasing inflation. The opposite is deflation. So far, as for the reading over the last couple of periods, median CPI was at 2.9%. We expect it to have remained at 2.9% in March. Trimmed CPI, which is the main focus for the Bank of Canada when they are making rate decisions, was reading at 2.9%. We are expecting a slight uptick to 3.0%. So remember, if inflation is increasing, it forces the central bank to hike interest rates. And if it's reducing, especially towards the central bank target, then the central bank is forced to cut interest rates. So we saw that recently happening in Kenya with a 75 basis points rate cut. And this was mainly because inflation in Kenya had reduced to within the central bank target. So in this case, further decrease in inflation would allow the Bank of Canada to cut interest rates, and that is not far off. So we're expecting the Bank of Canada interest rate decision to be happening tomorrow at 4:45 p.m., where the overall consensus is that they will be holding rates steady at 2.75%. So in this case, if we happen to see an inflation rate that is slowing, then it would create an opportunity for the Bank of Canada to continue cutting rates, and these would be weakening for the Canadian dollar. On the other hand, if we see inflation taking a rise or accelerating higher, let's say to 3% or even higher, then that would mean that the Bank of Canada may hold rates steady at the current level around 2.75%. And in that case, it will be strengthening for the Canadian dollar. So weak inflation, weak Canadian dollar, high inflation, stronger Canadian dollar. So outside of that, I don't think we'll be having any major news. And then ahead of tomorrow, we'll also be having another session at exactly 11 a.m. Before that happens, we'll be having some early morning news. One of them will be the core machinery orders report from Japan at 2:50 a.m. Then we'll also be getting GDP data from China. It will be a host of news announcements at 5 a.m. where we'll be looking at the gross domestic product from China, industrial production data, retail sales data, as well as fixed asset investment. And these could materially impact the trading of the Chinese yuan, Chinese stock market indices, as well as oil prices, which respond strongly to the performance of the Chinese economy. So remember, China is one of the biggest importers of oil in the world. So if the economy is doing well and is very strong, then they import more oil, which basically creates demand and increases oil prices. On the other hand, a weak Chinese economy tends to be negative for oil. So we'll be watching this closely ahead of tomorrow's market snapshots. So at 9 a.m., we'll be getting the inflation report from the UK. So as for the previous reading, we had 2.8%. You're expecting inflation to slightly weaken and get to 2.7% or even below. And in that case, a weaker inflation in the UK would likely weaken the pound. So the rest of the news will be covered during the market snapshot session tomorrow, which will be hosted by Robert Mbogo. So outside of that, now looking at other major key developments in the markets. So one, Trump says that he's considering tariff relief for car companies. So remember, he implemented a 25% tariffs on all auto imports to the US. And this has impacted a lot of companies in the auto sector, especially Tesla. So if we happen to see Trump considering a tariff relief for car companies, these could boost Tesla as well as other US automakers, as well as European automakers. And we could be seeing some recovery happening as soon as today or even tomorrow. So outside of that, I mentioned a key highlight here that Vance says good chance of UK-US trade deal as Trump moves closer to pharma and cheap tariffs. So the next stage of the US tariffs against the world will be mainly focused on the pharma industry as well as microchips or semiconductors. So if you happen to see this being implemented today or maybe tomorrow, then this could materially impact companies that mainly deal with pharma as well as chips. And these could increase volatility as soon as today. So we could be seeing some market reactions today, especially at the New York Open, which will be happening at 4:30 p.m. So I expect to see increased volatility in companies that are involved in these two subsectors. So outside of that, looking still at more updates in the markets today. One, we have seen what has been happening with the Chinese social media activity. So a lot of luxury brands are currently under attack, where a lot of Chinese business persons and manufacturers, as well as salespersons, are basically attacking luxury brands for buying cheap from China and then adding a heavy markup on Chinese products, labeling them and selling to the US as well as the Eurozone at increased prices. And as a result, some of these companies are seeing a lot of reactions in the market. So there will be a key focus in the market on LVMH, which is short for Louis Vuitton, Moet, and Hennessy. So clearly, a lot of investors are following up on this, and we could be seeing some reactions today in trading. So Japan's Nikkei eked out gains for a second straight day as car makers rallied, but stock futures pointed to mixed lower openings in European and US markets. So as I already mentioned, the fact that Trump is considering reducing or temporarily suspending the tariffs on automakers, this is creating demand for Japan automakers. So we could be seeing increased activity in that. So pharma looks to be the next sector to be targeted by Trump's tariffs, which would be a blow for European drug makers like Novo Nordisk, whose weight loss drugs have been global blockbusters in recent years. So these are some of the companies that majorly supply drugs to the US. And if Trump implements tariffs against the pharma industry, then some of these stocks could take a deep dive as of trading today. So that represents a key development in the market. So tech auto shares gain as Trump floats more tariff exemptions amid confusion. So tech stocks including Apple, Dell, and ASML rise. US to announce tariffs on imported chips this week. Commerce Secretary wants some new duties on exempted items. Trump's shifting tariff policy undermines business as well as consumer confidence in the US economy. So one more development we have seen this morning is that oil edges up on potential US tariff exemptions on cars pickup in China crude imports. So by basically freezing tariffs on automakers, this is a key boost on oil. And now also China in improving its crude imports basically creates more demand for oil. As a result, we are seeing some form of recovery. And as we identified in the charts yesterday, we have an inverted head and shoulder pattern, which I'll be illustrating later in the presentation today. So I'm looking to see if there is any other updates this morning. Somehow I can't find any additional updates. So from there, I believe we should head straight and get into some technical analysis. So I'm trying to share my screen yet again. In this case, I'm sharing the MetaTrader 5 trading application, which is the app we mainly use for trading. So as I mentioned, from the UK economy, it has had a boost this morning. So you'll notice that yesterday was a bit slow in the markets. Nothing much was happening. So as is typical of any Monday, you don't see much of trading. But now, as of this morning, you can see that we have broken above this area here, which is also yesterday's high. So we have broken above yesterday's high. And now we are seeing a potential move upwards for the UK 100 index or the FTSE index. So having broken above last Wednesday and Thursday's high, now it creates an environment where the stock could likely continue with the recovery journey after the sell-off that we saw about 2 weeks ago. So clearing, we could be seeing the market extending the gains and moving towards around 8,434 price action area. So on the pound USD pair, clearly we expected a complete reversal after the big sell-off. So the pound has been pretty strong. Yesterday we projected that the market would potentially hit the previous high. It didn't quite get to that area. So the projection we had yesterday was eventually hit this morning. And now we are seeing the market breaking towards the upper side, which points out to a likely continuation of the bullish momentum. So from the daily time frame perspective, there's still more room for upside with a high that we last saw on the 26th of August last year being the next target for the current bullish momentum. So it's not very far off, but we could be seeing the market retesting 1.32649 price action level. So on the other hand, if you look at Brent oil, which is the benchmark for global crude oil, so far we have seen this inverted head and shoulder pattern, which we identified yesterday, and we projected that the market would retest the previous high. So it continued moving high, go to this point, didn't quite get to the target level, pulled back downwards and then continued pushing higher. And now we are projecting that the market could complete the pattern and eventually get to $65.735 per barrel. So once the pattern is completed and the market breaks towards the upper side, then we could be looking at much higher target. But remember, in such a pattern, sometimes the market will hit the neckline and then drop yet again. So we'll be watching this 65.735 price action level as a key area to see whether there is momentum higher or whether the momentum fades and the market gets back down. So on the indices side, we have the US 30 or the Dow Jones Index. So clearly, the Dow Jones Index has been more of a sideways momentum asset, clearly struggling to break last week's high. So it's on a very gradual bullish momentum, but it's not making much of a sense compared to the kind of volatility we were seeing a couple of days ago. So with the volatility haven't gone down, especially after Trump froze tariffs for 90 days, we'll be expecting to see some form of reaction after we see the earnings from United Health Group, which I expected, I believe, tomorrow. The United Health Group tends to have a very heavy weight on the US 30 or the Dow Jones Industrial Average, weight of above 9%. It has the highest weight. So the earnings from the company will most likely lead to increased volatility in the Dow Jones Index, and this could drive the stock higher if the stock basically beats earnings estimates. And of course, if it misses estimates, then you could be seeing the price dropping further back downwards. So the key idea is that if it's better than expected in terms of earnings, we see a rally extending to 42,000. And if we happen to see a miss in earnings, then perhaps a drop lower to previous lows, in this case, a level of around 39,050. So for US Tech 100 or the Nasdaq 100 index, so as we mentioned, we're expecting some removal of some tariffs, especially in the auto industry. So if this happens, it could boost the Nasdaq 100 index higher. But in this case, we are still trapped between last week's high and low. So we could be seeing the market retesting last week's high. In this case, a price action level of around 19,229. So on the SP 500, we're also expecting the same, the market to retest the high that we saw last week, around 5,482. So we'll be watching this closely, especially during the New York session, to see what happens, especially if the market retests this area with more buyers for the upside, as currently the market is on a recovery path after the big sell-off that we saw in the last 2 weeks. So Bitcoin, on the other hand, is showing some signs of a rally, and this mainly after trading below this trend line that began on the inauguration day, that is on the 20th of January. So since then, the market has not broken above this particular trend line, save for today. So from the 1 hour chart, you can see we attempted to break yesterday, failed, but today we have a clean break, which implies the likelihood of a strong rally from this point onwards, perhaps extending back to the 90K price action level. So we could be seeing Bitcoin extending the rally, especially if we happen to see a very positive Nasdaq and potentially testing the 90,000 price action area. The dollar index has been pretty weak. Yesterday attempted to move higher, failed and kept going down, and now it's still trapped around 99.379. So clearly some form of consolidation is playing out in the dollar index, more of a sideways momentum since Friday's price action. So we'll be watching closely to see if there's a breakout in the dollar index, and knowing how weak the dollar index has been as investors deleverage or basically reduce the risk exposure to the US economy, then we have been seeing the dollar having this kind of sell-off. So any form of a breakout here would be a key signal, especially in the major cryptocurrency, in the major currencies, and this would likely mean other currencies gaining against the dollar. So one of the top gainers against the dollar has been the yen. So since the year started, notice how we have seen the dollar losing to the yen. So even yesterday, the market was really struggling to move higher. So clearly, what ended up happening was the market maintaining this sideways momentum. So we projected that the market would remain within these two trend lines. So it moved all the way up as we had projected, and then moved back downwards, but we are still in some form of sideways momentum. So clearly, opportunities may arise once the market breaks out of these two particular trend lines. So far, I would still consider USDN as a sideways moving currency. So next on the line is European equity indices, beginning with France 40 stock market index. which basically we expected to be moving higher yesterday. So there was a pullback to retest this particular level around 7,170. And since then, we had a nice bounce, and today we are almost breaking yesterday's high, which would likely indicate a potential run towards 7,481. On the other hand, if you look at the Spanish IBEX, we projected some further momentum upwards yesterday. It kept going up throughout the day, and today we are seeing a continuation, and we are almost getting to our target, which we had identified as this particular upper trend line here, which served as the highest price as of last week, around 12,773. So for the German stock market index, our projection played out as expected. So we expected some further momentum upside yesterday. So it has been a bit slow, but as of this morning, you can see that we have had some good momentum. So we expect this to complete the journey and potentially get to the previous high that we saw last week at 21,545 euros. Then for the Eurostox stock market index, right now you've just broken above yesterday's high, and it seems like the market is now extending based on our projection yesterday, headed towards the previous high that we saw last week at 5,061 euros per share. So clearly, a very strong European equities market. And if I had to choose a favorite, I would go for the UK stock market index, which has some fundamentals going on pretty well for them. So in this case, from the 1 hour chart, we have already broken above last week's high, and now we might be proceeding to the beginning of this strong bearish momentum. So here is where we started having the big sell-off as of last week, and now as the market looks to recover, potentially a strong run towards 8,434. So outside of that, I would like to introduce Emmanuel to cover a couple of more assets as we proceed with our presentation today.
All right. Thank you, Rufus, for that presentation. Thank you, the viewers, for coming through today. My name is Emmanuel, and I'm going to just be sharing with you a short presentation on a few pairs, and you can see how that price plays out. So, I'm just trying to share my screen here. All right. So we're going to look at a few currency pairs, and I'll share my perspective on that. And shall be starting off basically with gold, but in the meantime, due to the the current turmoil in the market, when you're trading gold, we did see Trump during his meeting with the president of El Salvador, where he came in to giving that insight that he will be increasing tariffs, or he will be imposing tariffs on pharmaceuticals very soon, and we're able to see gold moving to the upside. Then, what you need to understand in this perspective is that whenever Trump puts tariffs on some of those major industries, investors in other nations, particularly those countries, are going to run to the safe haven. For example, gold. So why you'll always be seeing this rally coming in gold during such announcements. So you can see that gold has been in a very upward move throughout the whole tariff period, or throughout Trump's reign, as we have seen ever since he got inaugurated. But right now, what I'm looking at is that I'm looking to see that we had a trend line that we broke out above from this area over here, that you can see like this, and we're able to retest it. So if price can give me a breakout on this area, we'd be looking for a retest, hopefully in the New York session. We shall look for a breakout, then a retest into these levels here. But we need to have a strong, solid breakout to confirm the structure. Then we can see a retest to these levels. On the other hand, we do have a level below this. In case that breakout doesn't materialize, we shall look at these key levels for price to come and pick good momentum that you can see pushing our gold to the upside. And as you've seen in Rufus' presentation, JD Vance is hinting on the pharmaceuticals strongly. So we shall be seeing investors running to gold in times like that, because gold is a safe haven. So on gold, that's the perspective I'm having right now. On the other hand, I wanted us to look at GPJPY. Now GPJPY, these were buys that have been materializing from yesterday. On the pound side, you need to understand that when Trump announced his reciprocal tariffs, the European market generally wasn't hit as much as they had anticipated would be hit. All the tariffs he imposed on them weren't as severe as they expected them to do. So if you've seen the rallies in European currencies, it's basically because investors get their money out of the safe haven and they run to gold. Out of the safe haven, which is gold, and they run to the currencies, because currencies have what they call the yield value. So in simple terms, there's a potential of higher returns when you look at percentage increase in terms of yield. Now that's what's backing basically the pound. So when you look at the Japanese yen and pound, we have been seeing this rally that began materializing from last week. As you can see, we had a strong push to the upside, a retracement, and we are seeing it pushing to the upside. So right now what we'll be looking at is for these highs to be taken out. Of course, we are seeing the reaction coming from them. That can trigger a retracement to another key level below. Then we can see a push to the upside. In the meantime, we can see we had a trend line break, some kind of like trend line break from here as well. And now price will be looking for basically an areas like this. We can see this retracement from the current resistance level pushed probably within these areas, and then continue the move to the upside, because I do have a key level that I'm watching to the upside over here where we can be able to take our next decision. So we can be able to look at this on GPJPY. We're having a fundamental backing on how the investors react to currencies as well to back the pound at the same time. So on GPJPY, this is the perspective I'm looking at that you can be able to see. On the daily time frame, you can be able to see it in a much clearer up angle, but these highs will be taken out, and you can see the resistance coming in from there. That's much expected, but I don't think it will be. I don't hope to see it go below this area in the same perspective. So that's as far as GPJPY is concerned. We can be able to see if that price plays in. You can see a reaction coming through. As expected, you can see it retrace lower, then push to the upside, because we did have an impulse that gave us a good shift, and then we had this correction move. And right now we're looking for momentum to break out to the upside. On the other hand, now let's look at a USD currency pair, and we have in USD. USD card. As we all know, the DXY has been pushing to the downside, and if you look at the DXY on a daily time frame, we can be able to see that we have been able to break below a major support level. As you can see this over here, we have been able to break below this level here on the dollar index, and you can see we are losing momentum. That can signal some possible retracement, probably to retest this area here. But since the momentum is bearish, it's not something you want to bank on a lot, but you could keep that in mind to know that, okay, the dollar index may probably retrace. We can see our loss in momentum or the rejections coming in. So with the dollar index, it can give us a clear picture on what the USD card is doing. So in the daily time frame, we have seen the bearish momentum coming in at the same time. All the previous days have been bearish. We saw a bit of loss of momentum as well. And right now we are going to look for the major key levels that it can possibly retrace back to. So if I come over here, we can see we have this key level that our price broke below. As you can see, we had the rejections from here that break out with some bit of difficulty over here, showing us the significance of these price levels. And price came and retested the first time, then it broke below it, showing you how strong this level was. And right now, when it's loss of momentum, we can expect that price can possibly be able to push above, probably to give a retracement to these levels, then later gain momentum to go lower, especially if Trump comes to put in the tariffs, because yes, they had the dollar a lot, though Trump is looking at signing deals, as he mentioned in the meeting with the president of El Salvador. So right now we are anchoring at these support levels that can possibly see pushing price to the upside. But just in case price tends to break below this, we can start to have another level way below over here. We have a good demand level down below. It's the next free zone we have. If we happen to have a good candlestick closure below, we can see price pushing all the way down. But that's in a long-term perspective from the daily time frame. On the lower time frames, for example, the 1 hour time frame, we can see this kind of movement, and we're seeing that we have a bit of a sideways movement as well. And we're just looking to see if we can have a breakout any of the possible sides. If we see it going below, we can see it break out all the way down, retest, then continue to the downside. If we see it breaking above, we can see it push all the way to the next supply level up over here. And basically, yeah, that's what we're going to be looking at. So with the USD pairs, I like aligning them with the macros because they give me a stronger bias. If I see Trump putting in tariffs and I'm seeing the dollar tanking, then I get a good structure that's aligning with that. It gives me confidence to possibly take a trade with higher precision or with more confidence, in simple terms, because I'm more confident on the reasons, the confluences, both from the fundamental perspective and the technical perspective. Other than that, for trading gold and USD pairs, it's very, very important to manage your risks at the same time. I'd just like to take that opportunity, or this opportunity right now, to remind everyone watching in from Uganda that we do have our first version or edition of the Trade Talk Uganda. It's going to be amazing. We shall be sharing a lot of tactics and structured tricks, and of course talking about risk management, psychology, and managing your finances as a trader, because it's very, very crucial. Other than that, don't forget to look through all the other other services provided by FX Pesa in your different locations from Kenya to Tanzania to Uganda. We have you covered for your best trading experience and to elevate your careers. Other than that, those are the pairs I'm looking at from my side, Rufus. Unless you have something to add on from those pairs, but yeah, that's what I'm looking at right now.
Nice. Thank you, Manuel. So I can see there's quite a number of questions in the comment section. So try to address some of them. So first question is thoughts on JPY pairs. So the Bank of Japan is expected to hold interest rate steady on the next meeting in May. But then from there, on the June meeting, we're expecting at least a rate hike. So the possibility of the Bank of Japan hiking rates is basically serving to strengthen the yen. So also at the same time, given the current volatility we have seen with the US dollar, the tanking of the dollar index below 90 earlier in the week is basically indicative of investors who are basically de-risking from the US market. And as a result, they are going for much more stable currencies. So whenever there is instabilities, especially in currencies, the yen tends to serve as a safe haven pair. So far we have seen the yen strengthening and the central bank is also backing it up. So clearly the overall expectation is that the yen is expected to strengthen in the near future. So in this case, if you're looking to trade the yen against another currency, I would most likely use the yen as the stronger pair. So in this case, you might want to consider pairs such as euro yen. In this case, where we know that the euro has been pretty weak. And in this case, look for potential positions where you buy the yen and short the euro. So I believe you can see my chart now. This has been the chart of euro yen. So we discussed this yesterday and we talked about this particular level holding off as the resistance in the euro yen pair. So I'm using a 1 hour time frame, and clearly yesterday the market rejected the area as we had expected. We had a clean drop from that area here. So today we have had an attempt to move higher, and now it seems like the sellers are coming back in. So depending on how the candlestick closes, we could be seeing some further extension further downwards. And in this case, we would extend to the lowest price that we saw on Friday. So clearly a good chance that the yen could continue strengthening against the euro ahead of an expected rate cut later in the week. So outside of that, there's more key developments, especially this is on the side of equities. So I'll try and share one more update, and this is from the earnings calendar. So as of today, we will be expecting more earnings as the earnings season kicks off. So remember, the first quarter ended on 31st of March, and since then, companies are now beginning to report their earnings from the first quarter. So on Tuesday, which is today, we'll be expecting earnings from Johnson & Johnson Company. So this is one of the favorite dividend-paying stocks, which will be reporting first quarter results ahead of the opening bell today. So CFRA analyst Sel Hadi recently reiterated her hold rating on J&J stock and her $163 price level, which is a 12-month target price. So in this case, there is an expectation that the J&J company will be doing well. So with pharmaceuticals still exempt from tariffs, Hadi notes we are seeing a positive reaction for J&J, which was down 4.3% from April 2 through to April 10, while the SP 500 index was falling by 7.1%, which means it was doing better than the SP 500. However, there's still that risk that Trump will be implementing tariffs against some of these companies, but J&J being a local company, it may not be affected as much compared to the pharma companies operating in Europe. So besides that, we'll be getting more earnings on the day. One of them is Albertsons will be getting earnings from Bank of America, Citigroup, Ericsson, and PNC. Then later on after the market closes, which is after 11 p.m., we'll be getting more earnings from Fulton Financial, Hancock Whitney, Interactive Brokers, JB Hunt Transport, as well as United Airlines. So these should be on your radar since they might have some impact in the markets. And as I had already mentioned, will be expecting more earnings later in the week. So clearly, as the earnings season kicks on, Thursday will be the key day where we focus on United Health Group, which is one company that has a very heavy weighting on the Dow Jones Industrial Average. So that's the one key item I had omitted when I was covering this. And now we go back to the charts. So let's see what we have here. So I'm trying to check on the comment section some of the questions we had. So there was a question on DXY. I believe we already covered this. For the dollar index, it's still under consolidation, still pretty weak. A lot of investors are basically avoiding the dollar as well as dollar assets, mainly because of the uncertainty due to Trump's tariffs. So far, since Friday's price action, we can say that the overall direction of the dollar index has mainly been sideways. This has been the main direction of the dollar index. So clearly, we'll be expecting some form of breakout that could play out as soon as today. And if that breakout happens to us the lower side, it would mean more panic selling of the dollar, which would likely lead to a rally in other currencies against the dollar. And one of the favorite pairs I would be considering is the USD JPY pair, where the JPY would be the strong currency to trade against the dollar. So also, based on this morning's news that have indicated a very strong pound from the labor market and a potential deal with the US, then the pound is also a likely candidate to continue making more gains against the US dollar. So looking at the next question, this is a question to check on Euro Yen, which we have already done, Euro New Zealand. So good question here. What about the EU previous retaliatory response to the USA? So the EU threatened to implement certain retaliatory tariffs against the US. And this was not cross-board, so it was sector by sector. So we're looking at further negotiations between the EU and the US, since already from the updates we have had on the BBC website, it's showing that the EU has already sent people or top leaders to negotiate with Trump. So we'll be looking at key developments in the market today, especially once it's daytime in the US. That should be after the US stock market open. So from there, you'll be getting more updates on the negotiations. So the negotiations haven't started yet, but later on, you'll be getting more updates, which will likely have an impact on the markets. So a good question from Moses Rono. What is the difference between market execution and a pending order? So this is a pretty good question. So I'll be answering it in two ways. So on one side, I have a Novice to Pro series, which is a course I basically developed to help traders begin their trading journey. So it's an introductory course, basically starting with what is Forex, and takes you through the entire course. So this is where you learn all the basics. So the next way I'm answering the question is that whenever you talk of a market execution, this is where you enter the market directly. So whenever you execute a market execution order, it can either be a buy or a sell. So you're basically telling the broker that I would like to buy this asset at the current market price or the closest price. And this gets you into the market immediately. So on the other hand, if you use a pending order, it's a conditional order where you basically make a request to the broker saying that if this asset gets to this price, then buy me this number of units. So if it's a sell order, then you say that if, let's say, that this asset gets to this price, then sell me this number of units. So the order is only executed when the market price gets to your determined price action entry level. So there was a request to check on the website that Emmanuel was using. I already responded to that. It's the tradingview.com website. So we have already covered Euro USD. So I believe a majority of the content that have been requested have already been covered. So the only thing we haven't covered is some analysis for Euro New Zealand. So mostly we don't cover the crosses, but I'll be doing an exemption for today. So just give me a sec. So Euro New Zealand currency pair. So we know that Asian pairs have been pretty strong today. both Australian dollar and the New Zealand dollar. So clearly, from what we are seeing here, if you go to the daily time frame, you can identify one key thing is that this market has been pretty strong. There was a lot of positive reactions earlier in the month, and now we are seeing the market resuming back to mean. So from the daily time frame, we know that we had a major swing right since when the month started. So this was the opening price at the beginning of the month. So from the 4-hour time frame, which basically marks the weeks, you're able to tell the major swings and how they have been playing out. So clearly, this is an important level in the market as well as this one. So from this area here and this high here, and I want you to pay key focus on the previous high here and the previous high here. So these two levels basically mark an entry point where you could be seeing some form of demand zone after the market pulled back from the high that we saw last week. And remember, we have already broken below the low of last week, which indicates more downside pressure on this particular chart. So from the 1-hour time frame, this is how it looks like. So clearly, if you look at the recent swings from this area here to this area, and then this area and this area, there seems to be some kind of a line of best fit. And also, if you compare the highs, then it seems like overall the market is taking this particular direction. And we could say that this is the overall market pattern. So clearly, in a market that has been pushing further back downwards since last week, this week we started with bearish momentum on Monday. Today being Tuesday, we have seen more bearish momentum. Then in this case, I would be of the expectation that the market keeps pushing even lower. So using a smaller time frame, in this case the 15 minutes chart, it seems more likely that the market would be looking to retest this area here. And once it retests, then potentially we see an extension of the bearish momentum. So in this case, I would be very much interested with what happens to the price action here to see if there is evidence of sellers coming back into the market and pushing the prices much lower, given that the overall trend on the daily time frame is a market that is erasing some of the gains it had made in the prior weeks. So clearly, there's still more room for downside momentum. So we continue watching on a smaller time frame to capture more accurate entries. So that being said, I would like to thank everyone for joining this particular session. So remember that we will be airing even newer episodes of the Bullish Banter podcast. So as of now, our latest podcast episode, we hosted FX Mwangi, where he basically narrates his journey from how he started trading Forex, right from binary options where he started with about $10. And from there, he did not make money from the $10 account, but he used that as the basis to grow into a Forex trading career. So it's a very fascinating journey, and his understanding of the market is really deep. So if you want to enjoy the episode, just check it out on the FX Pesa YouTube channel, click on the podcast and go to Bullish Banter. Then you'll enjoy this. You can also enjoy it from other podcast platforms. So outside of that, if you're a beginner in trading, go to FX Pesa YouTube, search Novice to Pro with Rufus Kamau. And these will basically help you understand some of the basic and key concepts in trading. And as you practice each lesson, you'll get to grab the skill, practice more on your trading account. And once you grow in confidence and skill, then you can eventually transition into a real trading account. So I believe you have answered all the questions that had been raised. Don't know if there's anything we missed. So yes, there's one more question here. Kind of advice on which indices are friendly for a growing account with a friendly minimum lot size. Indices, you can trade even a very small lot size of 0.01. So all the indices we have, they are quite friendly unless you are trading futures. So don't avoid the futures and go for the spot indices, and you'll be able to trade them comfortably. So it really depends on the work that you input in understanding the index you are trading. So for instance, if you are trading the NASDAQ 100 index, you need to understand its daily range. You need to understand the top companies that move the index, and understand the direction that they are taking and the market trend. So if you want to trade a much simpler index, maybe perhaps focus on the Dow Jones Industrial Average. So the Dow Jones or the US 30 has a smaller number of companies, so you only have to focus on 30 companies and then associate that with the US economy, and it will be easier for you to identify trading opportunities. So there's a question on my thoughts on gold. Gold is still super bullish. So yes, it's struggling to break into a new all-time high against 3,244. But given the uncertainties presented by Trump with his tariffs, there's still more room for upside potential in gold. So if you look at the daily candlestick and you compare the price action on Friday versus on Monday, it basically seems like we have a harami kind of candlestick pattern. And now today we are seeing some form of continuation. So clearly more likely that we see a new all-time high today, especially during the New York session. So we'll be watching this closely as we continue in the day. So last three. So good question. Please clarify, how does the dollar keep dropping and the US stock indices we expect buys? So as I've been saying, correlations are only temporary. They don't work all the time. So there are some times when the correlations will hold, sometimes some other times correlations will not hold. So given what has been the key drivers of the markets since January 20th, and this is mainly Trump's tariffs, we have seen the SP 500 experiencing increased volatility, even being more volatile than Bitcoin. And one of the things or the impacts these have had in the market is a lot of investors have had to take flight to safety. So a lot of investors have been going into safe haven assets, and that explains the strong rally in gold. So as a result, if a lot of investors are reducing their risk exposure to US assets, and this is not just stocks, there's also bonds and other investments in the US. So this has increased the supply of the dollars, and as a result, we have seen the dollar retiring going down. So yields have also been increasing, especially with accusations of Japan dumping their US treasuries, and as a result, with increasing yields, we see the exact opposite. In this case, the US dollar weakening. And as a result, what we have been seeing is more investors dumping US treasuries going into cash, and the dollar index weakening further. So this might remain until we see some form of calm in the markets, not daily updates from Trump, which cause increased volatility in the market. And as long as we continue in this kind of environment, we might expect to see more and more investors going for safe haven assets. So, good question here. I don't know if this particular attendee is asking based on a position they currently hold. So the question is whether there is a possibility of the USD JPY going back to 150. So it seems quite unlikely to me, given the overall trend. So if you look at the daily time frame and the rate at which the market has been dropping, it seems more likely that the USD JPY pair will be hitting 140 before it even gets back to 150. So in this case, I would be more confident that the market gets to this area here compared with the USD JPY getting back. And I believe I wasn't sharing that. So let's just do it a bit quickly. So USD JPY, this is the daily time frame. So it's more likely that the USD JPY will reach the 140.5 price action level compared to USD JPY getting to 150 price action level. So more likely that the dollar continues weakening and the yen continues strengthening. And also, if you look at the central bank policies, yes, the Fed might be holding rates on the next meeting, but then for the yen overall, we're expecting that the Bank of Japan will make at least 2 more rate hikes later in the year, and this is driving the yen strength in the market. So that's it for the day. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So enjoy a profitable trading day.